Hello everyone, welcome back to the channel. So today's market action is telling a very clear story. Weakness in the semiconductor sector is driving overall pressure, but at the same time major indices are now sitting at key technical support zone, which could define the next move for the market. The main catalyst today was a sharp sell-off in semiconductor stocks, which dragged the broader market lower. The Nasdaq composite falls nearly 2% with heavy pressure coming from chip related names including memory chip producers like Micron. Yes, this matters because semiconductor stock carries significant weight in growth indices, especially in Nasdaq. So when they decline, the entire index feels the impact. Investors are reacting to concern around pricing pressure, future demand expectation, and whether the recent tech rally has run too far ahead of fundamentals. Now, when we look at the technical picture, the market is not in a breakdown structure right now. It's still sitting at the key support levels. If you see the Nasdaq composite, it's still currently testing 50 days exponential moving average, which is acting as an immediate support zone, which is a strong support zone. If you see the Dow Jones, here you can see that, or if you see the Russell 2000 are still holding about their major moving averages, showing relative strength compared to tech. Meanwhile, the S&P 500 is still directly on the, like we can say that it is sitting directly on strong support area where buyers have previously stepped in. So from a technical standpoint, it shows that today's weakness, the broader trend structure is still intact. The indices are not breaking down, they are testing support within ongoing uptrend. From a broader perspective, if you see here, this looks more like a healthy pullback within a larger uptrend rather than a full trending reversal. Right now, we are seeing rotation out of high growth tech and into more defensive positioning, which is common after strong rallies. This type of correction will help to reset valuation and remove excess leverage from the market. However, the key shift is that the market is now more sensitive to earning guidance, especially from tech and AI driven sectors. To confirm the move, both the Nasdaq and S&P 500 closed lower today. With this majority of downside concentrated and semiconductors name, this confirms that today's decline was sector driven rather than macro driven, which no more with no more economic show visible in the data. We can see that there is no economic shock visible in the data. So the real question now is, will this support level hold and trigger a bounce back from this point, or we will see a deeper breakdown if selling continues in semiconductors? And more importantly, are we looking at a short term technical pullback or the start of a broader cooling phase in the technical trade? This is the question. I would be interested to hear how you see this setup developing from the this point. Let me know in the comments.